So these are the comments after Beyond Meat reported earnings on Thursday. These are comments that from people that just hate the concept of Beyond Meat. They think it's evil. They think the government or Bill Gates wants to force them to stop eating real meat and eat alternative meat or fake meat or whatever you want to call it. And frankly, these are the most uneducated comments. So for example, guess people are not liking fake meat. J.N. Lee says, even though Beyond Meat hit a record revenue in the second quarter of 2021. So these people have no idea what they're talking about. They're just speaking from emotion pretty much. And then this, on the other hand, is from someone who's in private equity, specializes in the consumer packaged industry, goods industry, anonymous account. But frankly, and these people are kind of lost in the weeds. They use all these fancy metrics when really all you have to look is just look at the simple numbers. Just be simple. These people over rationalize, and I think from deep down they also hate the concept of Beyond Meat, but they use very fancy metrics to justify their bearish call. And a lot of their metrics are backwards looking indicators. I like to look ahead. I like to be optimistic. And I get, to be honest, I get where both of these comments are coming from. Like people don't like new things. They don't like change. And then regarding this comment specifically, I get it's overvalued on various metrics. So for example, I'm going to use a very simple valuation metric. Not going to be all fancy, just price to sales. It's kind of like buying Tesla at these prices. They have comparable PS ratio, so price to sales, which is the price of the share divided by the revenue per share. So they're pretty lofty. And the market's pricing in a lot of good things for both of these companies. They see the future, futures EV, futures more alternative meat. So they're pricing in a lot of good news. But growth stocks, and Beyond Meat is a growth stock, contrary to what some people might say, are always going to be overvalued. No matter how you look at it, they're always going to be overvalued until they reach maturation. So they're mature companies, and by that point, all the wealth has already been created, and then the value investors will come in after the stock goes up like 1,000, 2,000%, whatever it may be. It's like, oh man. And once the company, grows into that valuation, they're like, oh man, now this is a good time to buy it. This company is undervalued based on these dinosaur metrics. I'm not saying this time is different. I'm just saying that's typically how it goes. They're always going to be overvalued until they're not, and when they're not is when they are mature companies and they've grown into their valuations. And I'm here to tell you that Beyond Meat is going to grow into its valuation, and it's not going to $25 per share. It's going to go a lot higher in the long term. First, I want to talk why I'm bullish on Beyond Meat. I know there's a lot of competitors, and people always say, for example, Tesla, all the GM's coming, Ford's coming, all these other companies are coming. They're going to get them. Same with Beyond Meat. Impossible Meat's there. Kellogg is there. I think with the Morningstar brand. There's a lot of them. There's countless of them, and they're going to steal market share, which to a certain extent they will. But at the end of the day, the market as a whole is just growing, and Beyond Meat, I think, is going to be the dominant player in that market, which it already is. And if you look at it on a historical basis, it's always good to bet on the leader. Tesla, Facebook, even Bitcoin. You want to run with the leading horse. You don't want to chase umpteenth place seeking that alpha. They have a higher, like TTCF, for example. You want to stick with the leader, the sure bet, because that's where the growth is going to come from. You should specify a leader in a growing market. You don't want to be a leader in a dying market. You want to be a leader in a growing market, and I think this is definitely a growing market, despite what some of those haters might say. All you have to look at the numbers, look at the trends. It's a growing market. And on Impossible Food, some people do say it tastes better than Beyond Meat, so why is Beyond Meat going to come on top of when it already is? But two, there's three specific things I think Beyond Meat does better than Impossible Foods. And I think many people, if you know Beyond Meat, you already know this. But if you don't, if you're not too knowledgeable, which I think many people aren't, they're not too sure what they're eating, to be honest. That comes with all foods. But like, they really don't know what the difference is. Beyond Meat has no heme, which is a controversial ingredient. Some people think it's okay, some people don't. But the fact that there's a lot of disagreement on this, it's already Beyond Meat doesn't have to deal with that controversy, the heme, and I think that's what makes Impossible Foods, that heme protein substance. Beyond Meat has no soy, so it already there's that whole soy boy pejorative. Beyond Meat doesn't have that, and it's also non-GMO, which I think Impossible Foods is. Well, when I say non-GMO, the Beyond Burger is non-GMO. All these are for the Beyond Burger. Beyond Meat has a lot of products, which also has a lot going for it. They have the burger, the sausage links, the breakfast patties, the meatballs, the beef. They're also venturing into the chicken tenders, which, to be honest, I tried those. They were okay. They have a lot of work to do. But their bread and butter is that burger. That's their flagship product. Also going into pork in China. But that's fringe right now. They're going to get there. They're going to really master. They're always improving their products. Always improving. So some people's like, oh no, I hate their product. These are unhealthy. Not thinking that this is a dynamic company who's innovating, always improving upon their recipes. So take a look here. I have the nutrition facts from Beyond 1, 2, and 3. The Beyond Burger version 1, 2, and 3. Look at that progress from the calories to the fats. Sodium was about the same, but they're making progress. It tasted better, incrementally better. Or I think 2 was a lot better than 1. 3 was incrementally better than 2 in terms of taste. But you can apply this to all their products pretty much. They're always making them better. So even if they may not be the best or comparable to meat right now, they will in the future. And that's going to help grow the market. And if you look at the margins, Beyond Meat has pretty decent margins compared to some of those established meat packers or companies like Tyson Foods. Beyond Meat has a gross margin. So it's like revenue minus cost of goods sold of like low 30s versus around 13% for Tyson Foods. That's pretty good. And then some people are saying, oh, but that margin is unsustainable as they lose market share. But it's the brand. And Beyond Meat can sustain their brand. They can sustain those margins. And I think in this economy, brand is everything. If you saw my Robinhood video, it's all about the brand. I think we're at an inflection point actually. So if you look at the operating income, let's go to the financial statements. This is big. This is key. And I don't think anyone's talking about this. But look at this. Last year in 2020, Beyond Meat had an operating income for the first time in its history. So it didn't have an operating loss. It had an operating income. It was positive. So I have a chart right here. Gross profit versus operating expenses. The green is the gross profit. Operating expenses is the yellow line. And the green line went over the yellow line last year. And I've noticed when other companies turn an operating profit for the first time, good things tend to happen. Not always, but if they can turn that, make a profit, operating profit, and sustain it, good things could happen. So starting with Tesla, had an operating profit in 2020, and then look at that stock chart. AMD, operating profit in 2017. Look at that chart. Square, operating profit in 2019. Look at that chart. Twitter, operating profit in 2017. Look at that chart. So will Beyond Meat look like that? I don't know. It's tough because like if you're really looking at the first 2 quarters, they're back in the negative. That's probably partially because of the coronavirus, and that's partially why Q3 earnings or forecast for Q3 was conservative. But look at this chart right here. The revenue to cost of goods sold for Beyond Meat. The blue line is the revenue, red line is the COGS. And that's happening. 2020 happened despite the coronavirus. So just imagine once we get out of the pandemic, this is a good trend. It's a good trend. And now I want to go to this chart. This is a really interesting chart, on a weekly chart for Beyond Meat since its IPO, and it's range bound. And I think it's going to stay range bound until around late 2022, maybe early 2023. This chart goes all the way up to September of 2023. And this is, I think, the growth stage part 1. Growing into that valuation where people are like first discovering this plant-based alternative, this new market, this new industry, and the revenue should be going up, continue to hit those record highs, but slowly growing into that elevated PS ratio that I mentioned earlier in the video. So I don't think anything's going to happen with the share price over the next year, just because of it's already a lofty valuation, but the revenue is going to continue to go up. Hopefully it can sustain that operating income. And then once it grows in that valuation, I think that's when growth stage part 2 happens. And what is growth stage part 2? I think that's when you see the revenue really start to grow exponentially. And that's because of 3 different reasons. 1, Beyond Meat shows that its products are healthy. They're doing a 5-year study with Stanford. They're funding it. And I know some people might be saying, oh, but they're funding the study. They're biased. All I have to say on that is there's a difference between funding and bribing. That's all. That's all I'm going to say on that. Beef price parity. Once they get those prices equal or maybe even undercut those beef prices, that's going to drive a lot of revenue. And then taste parity. Once they become equal in taste, maybe it's just a Beyond Burger, but that's their flagships. That's all that matters right now. Exponential revenue you start to see. So that would be part 2. And I think part 2 is when that chart kind of breaks out. And then there's also a growth 3 in my mind. Growth 3, we're not even close to being there, but that's when pretty much Beyond Meat, I think, establishes itself as like this, or when they actually start, I think, to innovate new products. I don't want to speculate on what, but like maybe they start creating literally new products. Like it's not beef alternative, it's like a new thing. That's a long time though. They first have to establish a lot of trust. They got to do those 3 things: health, taste, price, and then stage 3. And let's go back to this chart right here. I think so. It's in the midpoint, almost in the midpoint of this chart, which I think accurately reflects a neutral sentiment. So yeah, I showed you some very negative comments, but there's also a lot of positive comments if you like just read through Twitter and see what people are saying. And a lot of those positive comments are coming from like a lot of young people. So I think I think this chart accurately reflects that. It's like neutral, there's a lot of positive, a lot of negative. And the technicals are also neutral, this is not really a bearish thing, it's not really a bullish thing. It can go up or down. Which is why I think I'm just going to hold this and really accumulate. I think we're at the accumulation phase of Beyond Meat. So there are 3 things, that I think are just like a really good buy signal, and just incorporating these 3 things I said: technicals, the sentiment, and the fundamentals. The fundamentals are good. It's a growing market. Beyond Meat's the leader. They're growing their revenue, record revenue, a lot of products, improving on those products. It's good, right? Fundamentals are good. Technicals are neutral, and the sentiment's neutral. If sentiment gets very bearish in the technicals, you start to see that go back to this chart here, that the price on that bottom part of that triangle, that's when the sentiment's gonna be very bad. Then I'm gonna be really bullish on this. So right now, neutral, positive. So neutral technicals, neutral sentiment, positive fundamentals. Which is why I think this is a hold right now. Just accumulate growth stage part 1, followed by growth 2. That's when you're gonna see a lot of the gains. In my opinion, that's what I see. and then there will be a stage 3 way down the future, maybe like 20 years, 10 years, I don't know what it is, but I think there's a lot of good things here. I think we're in an inflection point with the operating income. I think you just want to bet on the leader.